Amid risk-off sentiment in the global financial markets because of rising inflation and a surge in COVID cases across the world's biggest crypto asset, Bitcoin, has slumped from a high of around $69,000 to less than $46,000 over the last month. The sell-off in digital asset investment products or crypto funds, which are generally preferred by institutional investors, came amid widespread correction in the crypto market. From December 11th to the 17th, the price of Bitcoin slumped by around 6%. Bitcoin-based funds saw outflows of $89 million during this period, but this was well below the outflows seen in June, when funds saw as much as $150 million leave the value of a coin. While the outflows appear alarming, there are several points to consider, one of which is that crypto assets continue to be of concern for government and regulators around the world, as their novelty, diversity, and accessibility open them up to scrutiny from fiscal authorities, while their volatility opens investors up to susceptibility. South Africa's National Treasury recently published a report that evaluated South Africa's anti-money laundering and counter-terrorism financing measures. The report revealed that South Africa has major deficiencies in regulating crypto assets, especially crypto asset service providers. Investments in crypto assets continue to rise across Africa. A Analyst report on the geography of crypto revealed that Nigeria ranked 8th out of 154 countries in its 2019 to 2020 Global Adoption Index. The country ranked first among African countries in peer-to-peer, P2P payments, moving $139 million in the past year. But South Africa is catching up, encouraging more investment with regulations to prevent investors. Our focus today is investment in South Africa's crypto assets. I'm Tolulope Adeleru-Balogun. Welcome. This is Business Edge. Joining me now is Olumide Adesina, analyst at Quantum Economics. Olumide is also a financial market writer and certified investment trader with more than 15 years of working expertise in investment trading. Olumide, welcome back to Business Edge. Thank you for joining me.
Yeah, good morning.
All right, so let's talk a bit about the adoption of cryptos. It's still relatively new, not, of course, widely accepted, but the adoption has seen an astronomical rise across the continent in recent times. But this is even coming still among some concerns about its fragility and, of course, the volatility surrounding crypto assets. What are the factors particularly responsible for the increase in crypto in South Africa?
Yeah, thanks for having me once again. We can't really take the full point fact that the crypto market has fast becoming mainstream based on simple reasons. If you look at year-to-date performance of this asset, for example, take Bitcoin, for example, Bitcoin seems to be the best performing financial asset of all time. And also, you just look at likes of the Ethereum and the meme coins just coming around the corner. I'll give you a good example. Meme coin Shiba Inu, for example, has given millions of percentage returns to investors that have just invested, just have exposure of over 12 months. So that gives you credence to the fact that the exponential gains have attracted a great number of young Africans. And you need to understand that many African currencies, including the South African rand and the Nigerian naira, have suffered against the almighty dollar, and that's not far-fetched. COVID-19 disrupted the economy. Many of these African economies are commodity-based. If you take a look at South Africa, for example, South Africa has great exposure in mineral resources, and that really dampened their economy when COVID-19 hit the market, because their major buyers, the Europeans, the Americans, couldn't have access to this market, and we saw downturn in the economy. And because they have more flexible exchange rate system, unlike what we have in Nigeria, we saw the rand suffering much more than the Nigerian local currency. So it was very imperative for local investors to look offshore, and the crypto market seemed to be the easiest convenient. So we've seen the crypto market gaining strong food in South Africa, Kenya, and Nigeria in particular. And that's not because that's just because it has dollar exposure and ease of carrying investment around that. And trust me, a lot of Africans are already seeing returns in the investment. Recent statistics by CNBC shows that 87% of young millionaires have crypto exposure. So that tells you that the crypto market has printed young wealth across the African continent. So it's unsurprising to see that. But look at it from the regulatory point of view. You need to understand that the centralized nature of the crypto market has made it very difficult for it to be regulated. Take a look at Bitcoin, for example.
Let's not get into that regulation yet, because that's part of the conversation. But before we get into that, we've seen that crypto-based trading activities in South Africa, Nigeria, and Kenya are now among the top markets for trade and investment. So part of the regulation issue is the safety issue, the safety and the security. So looking at these top three markets right now, Kenya, South Africa, and Nigeria particularly, how safe and secure are the investments happening in the crypto space in these countries?
I think, to be honest, it's really pretty much safe if you look at it in percentage. They take a look at data from chain analysis that tracks forensics around crypto transactions. Just about less than 10% has illicit transactions that tend to be illicit. And out of that 10%, I think Africa has the smallest. I think the most exposed is the Asian market. But you see, you need to understand that the centralized nature of the crypto market has given consent to financial regulators, and that's because for the first time in modern era, we are seeing the fact that funds can be moved without traditional institutions. I'm talking of banks. And take a look, for example, you look at Bitcoin, for example, on a per quarter basis, Bitcoin is moving transactions over $400 billion without the supervision of financial authorities. That's really creating some cause of nightmare, not in the African continent, also in Western markets like the United States. And that's why we are seeing pending regulation around that side. And we expect that in 2022, it might increase. So if narrative is the same in Africa, and we also see that the Central Bank of Nigeria, for example, really stamped their foot when they retreated by sending memos to Nigerian banks that they should not have any dealings with crypto exchanges. And that's because of, we've seen how young Nigerians basically use this assets for remittance. Take a look at remittance in 2020. Remittance dropped by 27%, and that was partly due to the fact that Nigerians were using alternative channels, preferably crypto assets. And you need to understand that Bitcoin, for example, has a stronghold in the continent. In Bitcoin interest, for example, Nigeria just stands behind El Salvador, telling you that the strongest economy in terms of economic size has growing sentiment across this asset. So it gives with regulators worry. But I think, to be fair, to be honest, I think the asset has done much more good than harm, because you need to understand that in an era of uncertainty, when we've seen how COVID-19 has disrupted the economy at unprecedented level, we've seen that this has created incomes for a great amount of Nigerians. We've seen that also businesses that have indirect exposure in the crypto market has really done decently. Look at the fintech industry. We've seen so many unicorns coming out in Africa. Total Wave, a good example. Cheaper Cash. All these that have indirect exposure to the crypto market. That gives you the credence that has created jobs and wealth in the African continent, despite the fact that we are seeing concerns that regulations are coming in.
Okay, so you did mention, of course, the fact that Nigeria has restricted the activities of crypto, particularly with commercial banks. And that's something we're seeing. In many other countries, central banks are directing commercial banks to avoid processing transactions that involve crypto assets. But that's not the case in South Africa. Is there a reason why South Africa is embracing it more than possibly restricting it or holding it off, even though they are working on regulation for the new year?
Yeah, I think you need to understand, you look at the adoption rate, you see it's stronger in Nigeria, and you need to understand that South Africa has a much more sophisticated investment community than Nigeria. I'm talking in terms of alternative investments. You can't compare the private equity industry, the hedge fund industry that is in South Africa with Nigeria. And also you need to understand that Nigerians are just directly exposed to the equity market, which this year has printed get-to-day gains of just 5%. But in South Africa, because of their exposure to Western markets, their easier exposure to Western market, we see more Africans trickling down to their markets than traditional markets. So the fact that they have more sophisticated instruments around their market gives South Africans more alternative. Then I think the South Africans also are taking a wait and see approach, but I think that has cost them some form of drawbacks. If you look at one of the biggest scams in the crypto community, I think is originating from South Africa, and that's because you've seen that the loophole in form of regulation and how they treat these investment assets has allowed some people to take advantage, and that's why Nigeria seems to be at the forefront of hammering down on crypto markets.
Okay, so let's get into the regulation conversation now. So the United Nations noted in its Africa Renewal magazine that given the constant changing nature of the cryptocurrency world, one of the biggest risks is a lack of proper regulation. In some African countries, we're seeing a lot of regulation being bandied about. Nothing really has been firmed up. But what kind of regulation are we talking about here? How far can regulation go with something that was meant to be anonymous, something that was meant to be under the radar, that was really meant to fly in the face of the traditional financial and banking institutions? So what kind of regulation are we looking at?
Yeah, I think the anonymous identity around the crypto market doesn't make it an asset that cannot be regulated, despite the fact, as you mentioned earlier, that by default, because of its decentralized nature, it means that there's no central authority governing it. But if you look deep into the crypto market, we've seen some structures that can be regulated. And you need to understand that in the financial industry, one of the credence across the market is that for anything to be efficient, the parties must be regulated, because you won't want criminal entities, you want people of shady characters to be in the industry. And we've seen what has happened in the crypto market, despite the fact of recent upside. We've seen growing number of rug pulls, investment scams, where people create projects of personal entities, dupe people, scam a lot of investors. So I think it's imperative for regulation to come in. But the question is the clarity and to what extent. First of all, you need to understand that most of these crypto exchanges don't have physical offices in Africa. Most of them are domiciled in offshore islands. So I think what many African countries are waiting for are the leads from advanced markets, especially from the United States, where there will be some form of synchronized and well-structured framework where the crypto market would start facing regulation. And already we are seeing that in terms of stable coins, which is a strong parameter around the crypto market, we're seeing that it's likely that the framework will come out early in Q1 2022. Yeah. That tells you that the market will face more headwinds in the coming year, because that's where a lot of cash coming in the crypto market. Also, we are seeing that in Nigeria, for example, the Security Exchange Commission has already created a department to take the crypto economy much deeper in research to understand the market more effectively. And also other African countries have already created skeletal structures. But I think we can't take certain things away that also, apart from the fact that government is trying to regulate the market, they're also looking at the advantages the crypto market is coming into the world of traditional finance. Take a look about the central bank digital currency, the Naira, for example, Africa's biggest economy. I'm talking of Nigeria launched the first African CBDC in Q4, and we're already seeing about 600,000 Nigerians already opening accounts with that, and about 160 merchants. That is already creating upside and has given President Buhari more confidence that the Nigerian economy might grow by another 10 billion based on exposure of the Naira. And also we are seeing the Americans and the IMF encouraging the Nigerian Apex Bank on taking the Nigerian economy through that route. So I think for us, we should look at positivity around the fact that the crypto market is here to stay. It's not possible. I don't see the flagship crypto asset, for example, Bitcoin, being banned because of the centralized nature. It has no central authority, it has no headquarters, there's nobody, there's no entity around it. But I see a lot of crypto parameter structures like crypto exchanges. I see some crypto assets going under. I see a lot of them being regulated. I see some going out of the way because
Okay.
by design, they are not suitable to be a financial asset.
Okay, so Olumide, let's pause here. When we come back, we'll look at, of course, how South Africa may have been able to surpass some of these challenges that we've noted. And then if someone is looking into getting into crypto as a financial asset, what should they be looking out for? These are pieces of the conversation that we're going to pick up after the break. You are, of course, watching Business Edge. Stick around. There's more right after this. Still with me is Olumide Adesina, analyst at Quantum Economics. Now, Olumide, South Africa, which we know has the most sophisticated financial sector on the continent, has recognized cryptocurrencies as an investment and taxable asset. But there are still concerns, and you've mentioned, of course, the issue around some of the fraud and the schemes. And recently, there was a major case in South Africa where investors in a crypto assets were basically defrauded. Some of them are just now being paid back. So how has South Africa been able to address the concerns and challenges around accepting this crypto investments as a viable investment option and bringing it in to the larger financial sector?
I think, to be honest with you, I think there's no affirmment, there's no strong structure in place based on the fact that, like I mentioned earlier, regulation around the crypto markets in Africa is a bit vague. And, the understanding is because of the way the crypto market is structured. And I think it's not because of the borderless nature of the crypto market. It's very difficult for a geopolitical entity to stamp its feet on the crypto market. But albeit that there's already ongoing study and research around the market, committees and structures have already been put in place. And we're already seeing that at places where fraud cases are reported, we've seen arbitration, and the fact that reach out to investors on how to settle these things are being put in place. We saw an instance where some investors had to get about 65% of their funds back, despite the fact that claims that their funds were hacked or was missing. So that was due to the reason that there is no actual law in place to carry out crypto market scams and putting structures around investment. But I think in the long run, I think those things are coming in light. Like I've said, we're waiting to see how the crypto regulation will play out in the world's most powerful economy, that's the United States, and that will trickle down. Already, we're seeing that the year 2022 will be a year of crypto regulation. But I think one of the things that we can't take away from the South Africans are that they have a very proactive financial sector, and that's not that you can't take the fact away that one of the biggest banks in Africa, I'm talking about the Standard Bank, is domiciled in South Africa, and also that gives you the kind of exposure their institutions have. So they have a way around investment assets, how to take investors, and because investors in that market are much more sophisticated and informed than other markets, they often get along than other frontier markets in Africa.
All right, so as financially rewarding as cryptocurrency investments can be, of course, with the volatility and the risk associated, what do those looking to invest in it as an asset need to look out for? What do they need to know before they put their money into this virtual currency?
Yeah, totally. To be honest with you, just like investing traditional financial assets, the same categories of how you view financial assets are also the same way you look at crypto assets. First of all, you look at the structure, you look at the team. For example, you look at what that crypto asset is solving. You look at the backers, you look at the liquidity. These are things you look at others in traditional financial assets. Also, you also look at the future upsides, the price entry. Take a look at Bitcoin, for example. Bitcoin this year has given investors more than 70% return, while Ethereum has given investors double that. We've seen Shiba Inu giving investors 20 times more than that. So one of the key things you need to understand is that you don't get too exposed. One of the things in the crypto market, because the volatility in the market is very, very high. A few days ago, Bitcoin was trading above $50,000. Right now, as I'm speaking to you, it's even below 50,000. That just gives you the volatility structure about the market. So those that have been successful investing in the market have less exposure take a look at Elon Musk, the world's richest man, has exposure in Dogecoin, Bitcoin, and Ethereum. But I can tell you that he doesn't have so much exposure to get erratic. And that's why most of these successful investors have a long-term horizon. So it's pretty the same way we view traditional assets. Taking small bites, make sure you have good price entry, know where you're going in. This is really not the time to buy crypto assets if you've not gotten so much exposure right now, because we're seeing interest rate coming up next year. So it means that risky assets will suffer. So I think people need to be careful about drawdowns. Despite the fact that we're seeing crypto assets give extraordinary gains, I expect the market to moderate in Q1, Q2 2022. But having said that, we are seeing lots of valuable crypto assets. We take the case of NFTs. You see the likes of Master Visa card coming to that space. We're seeing NFTs changing the ecosystem in terms of digitalization contracts. We've seen artworks of Africans being sold at thousands of dollars. So the value is just that you need to look at the perspective of the crypto assets you are looking at, and also the fundamentals of basically how you view traditional assets are the same in the crypto market. So,
all right, so Olumide, we'll leave it there for now. But as you said, and I believe many will agree with you, that 2022 is the year of crypto regulation. So there's going to be a lot for us to talk about in the coming year. Olumide Adesina, thank you so much for joining me.
Thank you, Tolu.
All right. And he said that if you are interested in investing in the crypto, just look at it as you would a traditional investment. Do your homework. Check the background. Who are the backers? What are the numbers? Be sure of what you're getting involved in. And with regulation coming in the new year, you may need to take a more long-term approach to this. Don't be looking to make your money quickly, but possibly be looking to hold. The year of crypto may just be 2022, even with the regulations coming. But we'll be keeping touch with that conversation. Up next is NC4 to watch. Stay with us. And here are a few stories we're keeping our eyes on. We started in the southern part of the continent, where the tide seems to be turning for South African banks regarding credit ratings by international ratings agencies. Now, ratings agencies are cautiously signaling that the outlook for banks in SA is improving, or at least not expected to deteriorate any further. NCBA Bank Kenya has lent Kenya Power 6.75 billion Kenyan shillings, becoming the largest local lender to the electricity distributor by taking over the company's overdraft facilities. Now, the NCBA loan is denominated in local currency and has an interest rate of 9%, comprising the central bank rate currently at 7% plus a 2% margin. Globally, emerging market assets are set to rise in 2022 despite moderating inflation and accelerating growth trigger gains. However, that will not happen until the second half of the year. This outlook was shared by Goldman Sachs, Morgan Stanley, and JP Morgan Chase for developing nation stocks, bonds, and currencies in the new year. And finally, streaming services in South Africa, Nigeria, Kenya, Egypt, and other parts of Africa have increased by 273% ahead of other regions of the world. According to a report by online video optimization and analytics firm Conviva Africa, Africa recorded the highest increase. Oceania saw an 80% rise, South America 56%, Asia 45%, Europe 24%, North America 2%, while the rest of the globe witnessed 21% growth. And that's the show for today. Follow us on social media at News Central TV. Download our mobile app and, of course, watch us where we are available to you. I'm Tolulope Adeleru-Balogun. I'll see you again soon.